Hello, welcome to Pro Trader Strategies Market Commentary for Tuesday, March the 9th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, how those two come in to impact the markets with some of my market analysis, and I do the same thing in these daily market commentaries. But I also talk about option strategies and how I'm implementing them into my portfolio based on those assumptions we come up with in our market analysis. Further, I do webinars every week where I have drilled down on each option strategy and streamlined the process for you folks to find that right strategy for your assumption. So what we do is we look at what is going on in and around our underlying, find a directional assumption, then that will lead us to the optimal option strategy. We don't just pick option strategies out of the hat. What we do is we have a specific process in order to find that strategy. So please check those out in my webinars at protraderstrategies.com. All right, so it is a Wednesday and we have some economic data, probably the best day for economic data in terms of, the quality of data that we're looking for. It is some of the more important data points is what I'm getting at there. And nothing really to see across the pond, but here in the United States, we got the CPI number coming in line with expectations at 0.4%. Now, you strip out food and energy, that core CPI number is lower than expected at 0.1%. So prices obviously being driven by our crude oil over here on the chart. And as you can see, crude oil starting to see a little weakness today. Why? Because we got our crude oil inventories and it was another massive build of 13.8 million barrels. It was expected to be a build of 3 million barrels. So 10 million barrels over what was expected. Not quite as big of a build over expectations as we saw last month. Remember that came in at 21 million barrel build? Well, we continue to see that build. I thought we would see some of this stuff in this crude oil numbers, shake out a little bit, and we would have maybe some revisions and things of that nature. Because remember, we saw there was supposed to be a drawdown last month of over 3 million barrels. We got a build of 21 million barrels. This week, we were expecting a 3 million barrel build. We got a 13 million barrel build. Now, where is all of that supply? Well, a couple of things happened. Last week, remember, we had the big build, and then we saw this massive drawdown in crude oil. Some of that dealing with the production pullbacks due to the cold weather and stuff like that. Well, at the end of the day, we saw this production re-ramp up. We are at basically 10,900,000 barrels per day on production. That's increased 900 million barrels this week. Well, we saw that pull back to 10 million barrels last week. Having said that, there's still crude oil coming in massive quantities, and we're seeing the continued drawdown in the refining process products like gasoline and distillates. Gasoline, a drawdown of 5.5 million barrels, and distillates was a drawdown of right around distillates was a drawdown of 5.5 million barrels. The gasoline was a drawdown of 12 million barrels. So again, continuing to see this demand for the refined products and a build on the other end. So we've got oil coming in massive quantities. We are seeing demand for those byproducts, which, has been something that has been lacking in the market for quite some time. That really is what was kind of holding up this crude oil market. But I think that those inventory numbers, the headline numbers on the builds, are going to weigh on this market a little bit more throughout the day. Now, having said that, let's take a look at this chart over here, and it looks like we are trying to bottom out on this 9-day simple moving average, where we've stayed above that. That's continuation of a bullish move there. We did on Monday get a topping pattern here, confirmation yesterday, but today looks like we're trying to hold off on a bottom here. Continuation to the downside is something I would like to see, and that's specifically for, a strong economy. And I do believe that the market is going to continue to migrate down there. OPEC Plus should come out with what their production numbers are. Now, even if they hold off on some of these production numbers, they're saying these guys, the little guys in OPEC, the smaller countries, are going to continue to keep this oil pumping. Why? Because the prices are so high. They want to capitalize on that. So a headline that they are cutting back on production doesn't always fit the story, because a lot of times those guys will pump out and kind of break those rules on their production limits, especially when prices are very elevated like they are right now. They're going to want to try and capture that money. And then we talk about the bonds. Bonds yesterday had a nice move to the upside, could not get above its simple moving average, the 9-day simple moving average. Again, testing it today, but not being able to make much of a move there. It's going to have a difficult time moving to the upside. Bonds are anyway at lower interest rates if we continue to see the strength in the equities. Now, we are seeing that this package, the $1.9 trillion relief package, 9% of that is going to the consumers in that $1,400 per person. Per person under $75,000, I think, or something like that, where that's going to affect 85% of the people, basically. Well, that being said, we should see a weaker dollar. It hasn't been necessarily the case lockstep here, and we're seeing gold just in negative territory, with Bitcoin wanting to make new all-time highs, it looks like, and very well could be on any given moment there. We can see the VIX is coming off, still holding on to the 20s. That is the new teens, if you will. And we've got the Dow Jones Industrial Average making new all-time highs here. And as you can see, that was printed during the day session. Now, yesterday, we got a bit of a tweezer top here and a doji that may have kind of signaled, that we were going to retrace a little bit. Today, an engulfing pattern to the upside makes it look like the bulls are completely in control. We can even see with the NASDAQ, this is a pause type of candle here. Any way you shake it, even if it goes maybe down to the bottom of the range of today's session, then that would signal maybe some bearishness. But at the end of the day, I think that we are looking at equities that are going to want to rally ahead of the stimulus package. They know that people are going to go out there and spend that money. How they're going to spend it, nobody knows, but probably very close to what they spent it the last time. A lot of people were putting it into trading accounts. Many people were going out and revamping their home in some way, shape, or form, and that was going to like the Home Depots and the DIY type of places to fix up the home or renovate it somehow, or paying somebody, like getting a new pool or whatever they might be doing. Anyway, we can see the E-mini S&Ps moving higher today, trying to get above this Fibonacci, the 123 that we've got there. That's 39.14, so we are not very far away from that and could easily be encompassed today. You can see overnight we were pretty strong coming into the day session off those CPI numbers. That looked pretty strong as well, but it started digging into those details and really seeing that maybe the prices are just going higher, not due to necessarily demand, but could be influenced by some of these crude oil prices that we're seeing there. And at that point, we started seeing some weakness there in the markets. Now, a little bit of a recovery as people are trying to sort this all out. But interesting enough, we have the points of control, at least at this time, lined up perfectly in line with one another. So we don't have an inside day because we got our value area highs outside of yesterday's. But for the most part, it is feeling pretty tight in and around yesterday's range. All right, so swear, I only put this trade on a few days ago, and I'm already looking to get out of it. As a matter of fact, this trade was at 50% of my max profit only moments before I started really paying attention to it. And with that said, I did sell those, what were they, in the April, sold the 150 puts in there for $1.45. Collection, so I collected a credit of $1.45. It was the low I saw was right around 65, I think. And that's when I decided I needed to go in there and start getting aggressive with this because it's right there at 50% of my max profit. That's my target. Well, I did miss that. So I'm right now working a 70-cent bid. I think the last I checked it was 72.85 or something like that. So It's a little bit away from me right now at this point in time, but I've got a working order in there to try and get out of these for about 70 cents. So I'm staying mechanical with that. Yes, it's only been like a day or two. As a matter of fact, 2 days. I put it on the 8th of this week, so on Monday, and got a couple of nice moves there. Like I said, very close to 50% of max profit, and I'm looking to take that one off today. And that's all I got for you guys. That's the only thing I've done. I've run through the whole list of my whole watch list and haven't really found anything really sticking out. I'm trying to find something where we've got this reopening trade that I can take advantage of it, but it looks like a lot of those stocks have already popped during this whole sector rotation. So I'm just keeping my eyes out, but at this point, just looking to cover that square trade that we put on Monday. All right, so that's all I got for you folks. Take a moment to go over the disclaimer, please, and like the video if you found something useful out of this. Share it with a friend. Appreciate all that. And if you have any questions, comments, or anything else, throw it down there at the bottom. I'll be happy to go back and forth with you to make sure you guys are all clear on concept. All right, so if you can't take that, take it easy.